guys, it's Metro Trades. In today's video, I want to address the the four biggest mistakes that every unprofitable trader makes and how to fix them. Okay, so let's get right into it. The first mistake that every unprofitable trader makes is trading without a solid plan. You wake up, you see a hot ticker on X or Reddit, maybe somebody posted something, oh, I'm up 100% on this play, get in, get in, get in, and bam, you're in. You don't have any entry or exit strategy, no risk assessment. This is like driving blindfolded. You're bound to crash. Markets are chaotic, and without a plan, you're reacting to every dip and pump, racking up commissions and losses from every single impulse trade. So, how do you fix this? The key way is to build a trading plan before the market opens. Define your strategy. Are you scalping futures? Are you swing trading crypto? Set clear rules. Entry based on technical analysis indicators like RSI or moving averages. Do you have position sizing set? Mine is usually at 1 to 2% of my portfolio, and you must use hard stop losses. Review this tip daily and use tools like TradingView to backtest your plan on historical data. If you want to do futures, you can use FX Replay, which has a great backtesting program. Stick to this trading plan religiously and have no exceptions. So, first, let's show an example of how you might structure a trade like this. Okay, so the first thing that you want to do is you want to wake up, let's say, hour and a half before market open, prep through, look at all the tickers that you want to trade. Maybe if it's crypto, chart it out for a quick minute. See what the resistance levels are, mark out key technical things, however you trade. And then what you're going to want to do when you enter a trade is find out your position sizing. I use Trade Locker, which helps me automatically do this, but there's many free websites that help you do this too. And what you're going to do is you're always going to want to use a tool like this to help you set a stop loss and set a take profit. Say I shorted Ethereum right here. Maybe I had my stop loss right here and my take profit right here. So once Ethereum reached this point, I completely closed my position. I didn't let it fall more. I didn't come back. I just took profits where I saw it, and that's how I did it. And how to fix this step by step: write a one-page trading plan tonight. Include your edge, whatever that may be. Use entry rules, exit rules, and risk rules. You may want to focus on sessions. For me, I trade New York session and Asia session. And once you create this plan, backtest it using TradingView Replay or FX Replay, like I mentioned, and review this daily. At the end of the day, did you follow all your rules? And you can maybe adjust this later on, but I would say, yeah, for the first 20 to 30 trades, just don't change it at all. Stick with it and just see what happens. Me personally, I had my trading strategy, which I wrote down. It says step 1, 1 hour, 4 hour support slash resistant levels must be hit. Step 1B, 1 hour, 4 hour liquidity fair value gaps. Step 2, 15-minute fair value gap must be hit. Then in step 3, we wait for a bullish or bearish reaction followed by a 5-minute fair value gap. When to get out of trades, TP, put your take profit at support slash resistance levels and put your stop loss at support slash resistance levels. Okay, now mistake 2 is terrible risk management. You may risk 5 to 10% or more on conviction trades, but move stops when they're about to hit, or pyramid into losers hoping for a reversal. One bad futures gap or crypto flash crash and your account is completely nuked. Leverage turns small mistakes into catastrophes. In 2025 and 2026, crypto futures wipes alone cost billions. You may have seen headlines talking about how 50 billion was liquidated from the crypto market. And this is all because people are over leveraging and do not have enough margin to cover it. Over leveraged positions got auto liquidated in cascades. As you know, October 10th was a great example of this. when the crypto market just completely fell because of over leveraging. And how do you fix it? Enforce the 1% rule religiously. Risk no more than 1% of total capital per trade. For example, if you're using a 50K Top Step account, you want to max risk $500 per trade. You want hard stops only, no mental stops, and place them at logical levels. And you don't want to be trading multiple assets at a time, usually only one asset like BTC or ETH. And if you're longing all of them, that's probably not a good idea. I would stick to one asset at a time. And if you see another position open up on another asset, then wait for one trade to close before going on to the next. And you also want to build a buffer. Keep 40% to 50% cash reserves for drawdowns. Survive to trade another setup. And now we get to mistake number 3, which is one of the hardest and something that I still struggle with myself. And that is letting emotions run the show. You hold winners past targets, chasing more. And when you're fearful, you cut winners early or avoid entries. And even you revenge trade. After a loser, you force the next trade to get it back. And this just goes into a classic overtrading spiral that you'll never get out of. Psychology data shows that emotional traders underperform by 20 to 40%. Revenge trading turns one loss into 5. Now, how do you fix it? Like I said before, you should have a clear trading plan. And in this trading plan, include some rules. For example, mine is you can only take 2 trades a day. If it doesn't matter if those 2 trades are win, if those 2 trades are a loss, you just stop trading. You must trade mechanically, use rules over feelings. If it doesn't match your plan, then pass it right along. And after a loss, mandatory 15 to 30 minute break. Walk away from the charts, step outside for a sec, just clear your mind. And also, you want to journal your emotions. If you felt angry, if you want to revenge, if you skip the next setup, these are all things that you can journal down and that you can review over and help you see what exactly went wrong. Set daily trade limits. Like I said, mine is max to 2, but there's many people that do 3 to 5 high quality setups. And if you hit it, just shut down your computer and get off. And if you want a mindfulness hack, before you trade, ask, am I entering the setup? Am I entering for the setup or to feel better? If you can't afford to lose that trade, just don't take it. Build discipline like a muscle and paper trade to learn emotional control first. Now, let's talk about the last mistake, is that you don't journal. You trade, it may be a winner, it may be a loser, but you just close your screen and then you just go do whatever. This is not going to work. You must track your patterns. If you don't do this, you're going to repeat errors forever. Consistent traders evolve, but unprofitable ones stay flat. And how to fix it? You must journal every trade. You can screenshot your entry exit, write down your reason, how much you won, and what you felt like. And every week you can look up, see what your win rate was, what was your average risk to reward, and look at how your mentality was over the week. Say your mentality was great, you had a lot of winners, but say your mentality was bad, you had a lot of losers. Or say you use this one confluence and you won way more of your trades than if you use this other confluence. Journal is such a good hack to become better and evolve and not just stay the same. And yeah, although I can't show you my journal right now, I also journal my trades, and every single trade that I take, I also put in the journal. So thanks, guys. I hope that you do well on your trading journey, but I just wanted to give you guys some insights on how to fix the biggest mistakes that you can make in trading. Thanks, guys.